Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me is Ryan McCormack. He's the QQQ equity ETF strategist over Invesco for an update on the Nasdaq-100 performance as it leads the major U.S. averages. Ryan, it's great to have you with us as always, and that outperformance has been pretty significant, and we can see that on the year-to-date in April charts.
Hey, Jill, thanks. Yeah, and it's a pleasure being here as always. Yeah, QQQ continues its outperformance. I know when we spoke last week, it was just barely positive. Now a little bit more in firm territory, a little bit over 2.5% up on the year through yesterday, with the S&P down a little bit over 10.5%. I think as we look at the month of April, significant outperformance as well off of kind of the bottom that we saw in late March or mid-March, I should say. QQQ up 15.2% on the month and beating the S&P, which was up less than 13%. I think a lot of that is what we've been talking about, right? It's investors recognizing the opportunity of the shift to digital. A lot of these Qs companies are certainly there to potentially take advantage of that. And beyond that, a slew of pretty decent corporate earnings releases.
Yep, as we like to call them, the modern day industrials. Now, there are a couple of laggards within the index. No surprise to see that it's the airlines that are really rounding out the bottom of performance.
Yeah, and we've kind of seen from a monthly basis, the airlines are consistently down there in the laggards, along with a lot of travel companies, hotels and some of the online booking companies as well in months past. But I think what's staggering here is there were only 4 names down for the entire month of April within QQQ. Obviously that speaks to kind of large scale April performance that we saw with Qs up over 15%. But that being said, I think markets have largely shrugged off this kind of less than stellar economic news that we've seen and really rallied around not only the corporate earnings releases, but also this unprecedented government stimulus that we've seen. Just pretty amazing to see only 4 names down for the month.
All right, and moving along to earnings here, really kind of in the thick of it right now, Apple. Again, it just continues to lead. It's where investors want to be. That's where we were before we had COVID-19 lockdown and where they're looking to return.
Yeah, and I think Apple is just an unbelievable company. Obviously, very innovative, right? And everybody knows and loves them. But I would equate it to almost this generation's ExxonMobil. I mean, it has been just such an unbelievable wealth creator for investors. And because of that, you've seen incredible investor loyalty. Not only do they believe in obviously the company's products themselves, but also in the stock. I mean, when I look at it, like my mom is a perfect example. She has every Apple device under the sun and is an Apple holder, and I think loves this company. And with that, you see that unbelievable loyalty kind of shining through. You're looking at on the earnings call, Tim Cook was talking about record for services, quarterly record for wearables, unsurprisingly home products, and a quarterly record for Apple retail driven by their online store growth. So, as people sort of sit in their homes and we start to see their China business come back online, not a terrible slowdown, right? Just sort of a shift from going to the retail stores to buying their products online. And as we talk about their products, their supply chain is back up and running. They have newly launched products, iPad Pro, new MacBook, new iPhone, seeing significant demand there. And Jill, just to talk about a topic that we discuss pretty often and fits in nicely with these 21st century industrials. When you look at these companies now relative to, say, the height of the tech bubble, they're remarkably different businesses, significant earnings and sales growth that we always touch on. And we in many cases, look at the dividend growth as well. These companies are cash cows. They have found unbelievable ways to take their R&D spend and monetize that to the point where it's really trickling down to the bottom line. Apple announced the 6% dividend increase. They authorized $50 billion in share repurchases, and that's in addition to the already $40 billion authorization that's under the current plan. They have net cash of $83 billion. They hold $193 billion in cash and marketable securities relative to $110 billion of debt. So, when you look at a company of this size that has all of this cash and is trying to return cash to the shareholder, it's unbelievable to see that they're continuing to see growth in segments of their business. And again, I think it really does harp on the fact that they are a 21st century industrial that consistently uses their R&D to innovate.
Ryan, I'm so glad you brought that up because I remember the content that we did together was either in December or January. You had one of my favorite charts that we've put up at MarketSite where you could see all the companies in the Nasdaq-100 that spend more on R&D. That's one of the reasons why the index consistently outperforms, because they're spending that money for future growth. It's one of my favorite charts that we use.
Oh, absolutely. And we'll maybe we can try to get that chart up for next week. But yeah, what you see is consistent commitment to R&D to the tune of almost 2 times that of the S&P 500. Again, that kind of trickles down to the revenue, sales, and earnings growth that we've seen. But yeah, this commitment to consistently innovate, I think, has allowed these companies to stay ahead of the curve. And when you see an unexpected event in the market, like this huge shift from working in the office to working and learning from a school perspective at home within this quarantine, companies within the Nasdaq-100, as we've seen in the earnings transcripts, are there to capitalize on this shift. So, that commitment to innovation really has served them well.
All right, Ryan. Great to have you with us as always on Trade Talks. Thanks for joining.
Thanks, Jill.
All right, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.